Hello everyone, myself Vaibhav. I welcome all of you to today's session of Market Movers, in which we are going to talk about the Euro USD, which has entered into a consolidation phase after making a high closer to 1.19, and now it looks increasingly likely that it might spend coming sessions in a sideways manner with bias being on the bearish side. Right now it is trading close to 1.175, so we will see if there are any emerging opportunities for us in today's session. If you consider the trading context for the day, earlier in the day we got the inflation data, the CPI numbers for China, and here surprisingly the data has been more upbeat than expected. And now for the month of July, the inflation rate stands at 2.7%, which is increase over the 2.5 reading which we saw in the prior month of June. Even in terms of month on month, the reading is good and it stands at 0.6%. But on the equity front, things are kind of topsy-turvy. Of course, there is not much volatility, but market is finding it difficult to enter into a clear-cut directional phase, and in lack of direction, we have this sideways momentum with the range being pretty narrow. So we will see if any trigger, maybe in the US station, if it comes, then only we might see the movement on the either side. Right now, the market is caught up with this US-China tension and also the stimulus bill impasse between the Republicans and Democrats in the US Congress. So, unless and until there is some breakthrough on this front, we will see these sideways trades persisting. But the underlying momentum has been on the bullish side for quite a long now, and I think that momentum might help US equities in the coming session. Now let's move on to the technical front. Here we will consider the Euro USD, and then we will take a look on the Germany's equity index, the DAX. Let's start with the Euro USD's technical outlook. First, this is the daily time frame chart, and here I don't think that I again need to repeat, as the rally has been kind of visible and prominent for almost 2 to 3 months now. And this consolidation, which ended in the first half of May, gave way to this upward momentum, and now almost after 10 percentage point move, we might expect the Euro USD to enter into a consolidation phase, and this was the second leg of its rally. So on this almost 100% Fibonacci expansion of this prior rally, we can indeed expect some sort of consolidation. And here, if you look closely, we have double top kind of formation taking place close to 1.19, and it becomes clearer if we go for a lower charting time period of 4 hours. And I think that is also likely to hang heavy in the Euro USD's near term outlook. And in near term, short to medium term, we can expect the consolidation to last with bias turning bearish if we get a fresh break below this 1.17. In that scenario, we can expect a move toward the 61.8% Fibonacci expansion, which is close to 1.16. So moving on to the lower time frame chart, of course the price action is still in the bullish territory. If we go by this standard pivot point series, the central point stands at 1.162, and anything above that is traditionally considered bullish. But if we simply use this price action, then here you can see that the rally is now entering into a stall phase, and also the price action has gone below this lower band of upward moving regression curve, and in due course of time we can expect this regression curve to flatten somewhat after this steep incline on the upside. And if from the perspective of, I think, the daily time frame charts also, a correction towards 1.16 is actually going to be a good opportunity for the traders who are trading from the longer term perspective, the swing traders, as that will give the fresh opportunity So from short to medium term perspective, I think the bias, if we can adopt on the bearish side, it is likely to be more profitable. But on the longer term perspective, it can be considered as a correction only unless and until we see a fresh break below this crucial level. So from the lower time frame perspective, here we have this resistance forming around 1.18 zone, and we have this confluence of 50, 100 and 200 SMS coming together close to this 1.18 price band. And after we saw this break happening on the lower side and then do consolidation, and again during the European trading hours we got a move on the lower side, almost 50 to 60 pips move, and from the lower side we are getting some retracement. But from the technical perspective, I think now as long as the price action is taking place below this crucial resistance zone, we can indeed continue to look for short selling opportunities. So anything closer to 1.18 should be looked into from the lens of going for short sell trades, fresh short sell trades. So here we can adopt a strategy of sell on rallies. Of course, the rallies are going to be short, and given the volatility which we have seen in the Euro USD, the 50-60 pips move doesn't really look really big. And if we are fortunate enough and if we see any move toward this 1.18 zone in the latter hours of today's trading session, so as long as there is a no break above this crucial resistance zone, I think we can indeed look for short selling opportunities after due consolidation. So watch out for price action in today's session, and anything closer to this resistance zone can be lapped up for fresh trading opportunities. And then on the lower side, we will need the break below this immediate support zone of these prior swing lows around 1.17. Anything below that will open up the way for the Euro USD to move lower, and then, as our title suggests, we are expecting a move towards 1.16. So that will be the opportunity for us. And here, if we are going in for a short sell trade anywhere close to 1.18, I would think that a stop loss of anywhere close to 1.185 to 186 should do well. But of course, if the movement occurs pretty swiftly, we will have to wait for consolidation. So whenever we see the retracement happening, of course we will have to allow a couple of hours for the price action to play out, and only when we see that the resistance is being able to keep a lead on the price action and being successfully keeping the price action from going beyond these 100 SMA, then only I think it will be advisable to go in for a fresh entry, anything closer to this level. And in that scenario, the stop loss can be kept closer to 1.185 to 1.186. And then on the lower side, for a risk of around 50 to 60 pips, we can expect almost more than 100 pips move, as our immediate target will be beyond this immediate low of 1.17. And if things go out, things go in our favor, if things turn out well, then as I said, the 1.16 is not really far away. Now let's turn our attention to the equity segment. Here we will see the DAX. This is the daily time frame chart, and after making low close to 8,000, the DAX has rallied more than 50 percentage point, and in second half of July it even went above 13,000. After that it entered into a consolidation phase, and almost 100 pips, 100 points losses were seen as it nosedived. But on the lower side, it did found support, and after consolidation, here closer to prior swing lows, again it is trying to consolidate around 12,500 zone, and on those levels we are seeing some fresh buying momentum is coming in whenever the opportunities are visible for the traders. The longer term perspective still remains tilted to the bullish side, and I think this upside momentum is likely to persist, and eventually we are likely to see the DAX forming fresh high above this prior swing high. So a move towards 13,500 is being expected. So from current prices, we are almost looking at a 100 points move. But of course, it's not that easy to catch a 100 points move, and we are not really going in for a 100 points move in a one trade. Rather, we are adopting a shorter time frame, and here the stop loss as well as the target price will be much sharper. And for us, the immediate marker is going to be this central pivot point of this one's pivot point series, and for us the central pivot point stands at 12,570. So here anything above that can be considered bullish. I think we had taken a look on the DX couple of days back also, and then as well I had said that unless and until there is a fresh break below this, the bias is likely to remain in the bullish phase. So if any of you had gone in for trade that day, I think you might be sitting in profit in today's session. Even in today's session, some fresh opportunities are indeed arising for those who might have missed out then. So here in today's session, we can indeed try to figure out fresh opportunities. And as I said, unless and until there is a fresh break below this crucial level, the trade can be confidently taken for a buy side, for the long side. The regression curve, which is bending steeply on the downside, will flatten as long as the price action continues to remain in this consolidation phase. So that will force the flattening of the regression curve, and for that we might need a session or two. So watch out on that front as well. But what is clearer from today's trading session, from today's price action which we saw in the DAX, is that on the lower side people are willing to enter into the trade for the buy side, and as soon as the DAX touched closer to this 200 SMA zone around 12,600, we saw sharp reversal, and it eventually went back to touch the 12,700 area, and now it is consolidating closer to that. So as we were expecting the confluence of 50, 100 and 200 SMAs to act as a resistance zone for the Euro USD, here in case of DAX we are expecting this confluence zone of 50, 100 and 200 SMA to act as a support zone, and as the price action is holding above this confluence zone, we can be fairly confident of the continuation of upward momentum. And on the lower side, a stop loss just tad below this prior swing low, anything closer to 12,500 I think should do well. So with that stop loss and entry point anything closer to 12,650 should do well. So for a risk of around 150 points on the higher side, you can expect a move of closer to 13,000, and that will give you a risk reward ratio of roughly 1 is to 2. So from that perspective as well, I think the trade is evenly poised. We are taking well calculated risk, as we are going in for a risk of 150 points. We are targeting a reward of around 300 points, and that should be prudent enough. And unless and until there is a fresh break below this prior swing low, we can indeed continue to trade with our bias remaining on the bullish side, and that is also being confirmed in today's price action. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.